Joining us now to discuss this is Jeff Grabow, Ernst & Young's U.S. venture capital leader. Jeff, thank you for joining us tonight.
Thank you for having me.
Jeff, are we in or entering a VC startup bubble? Do you agree with Mark Cuban?
Well, Mark's comments were focused on the angel investors. And what I'm seeing in these angel investors is they're tech-savvy people. They've made their money in technology. They work in technology. We're seeing early employees from Google and Facebook and others who have done well acting as angels. So they've got good exposure to the market and they understand it. This is not a scenario where you've got mom and pop, your parents or your grandparents putting their pension money into something that they don't necessarily understand and hoping that it will go up 100% in the first day. So I don't agree that that's a problem. In addition, when we look at the cost to start these companies has plummeted in the last 15 years. The technology that has been developed has been pushed into the company creation cycle. Therefore, the amount of money that's at risk in these angel-backed deals is much less than it has ever been in history.
Well, let's get back to the mom and pop investor, because I don't know if that point is necessarily accurate, as Mark Cuban argues that you have a lot of people putting money into these crowdfunding sites from $15 to $10 to $5,000, and these aren't regulated yet. There's no liquidity, so they're betting on a big billion-dollar payout or less. And should that not come to fruition, they're stuck. They can't even sell the stock, hence the point about liquidity. What are your thoughts on that?
Well, there's not liquidity for all these deals, and not all those deals on crowdfunding sites are technology deals. There's a lot of other industries that are doing performing arts deals. There's a lot of nonprofit deals. I've actually contributed to families in distress who have had tragedies to help out on a compassionate basis. That's being done a lot. So it's not 100% tech focused. It's not 100% at-risk focused. So I still don't follow the argument.
But Jeff, we are seeing huge overvaluations, or maybe accurate valuations, and that's the point that I want to hear from you. Do you think that we are worth these unicorns, if you will, these companies worth over $1 billion, for example? Is the valuation behind a company like WhatsApp at $19 billion accurate? Is the valuation behind an Uber at $40 billion, which is really about more than 70% than the market cap of companies in the Fortune 500? Are these valuations in line?
Well, it's very difficult to value a private venture-backed startup company because, in a sense, what you're talking about is companies that have been born to attack new developing markets that are changing all the time, and we don't understand the full potential of what those markets entail. I remember when the first unicorn, which was Facebook, was born, and Microsoft invested in them at a $15 billion valuation. And I remember thinking that we were in new territory, and that was a big event because we had never seen a public tech VC-backed IPO at that valuation, let alone a private VC deal done at that valuation. Yet Facebook's market cap today is over $220 billion. So I think that just goes to show you how difficult it is to value these companies.
So Jeff, what is driving these unicorns, if you will? What is driving the $52 billion that we saw in VC just last year alone? Well,
we're in the middle of a platform shift right now. We're going from feature phones to smartphones and from PCs to tablets. And essentially what that allows you to do is carry around a computer 24/7 and access data at any point in any time. And new companies are being born to help deliver products and services in novel ways. You know, when you look at the unicorn list, it's roughly 90% of the companies on that list either offer a mobile-first solution for products and services, or are companies that provide technology that allows that to be delivered. And I think as we look forward, we're very early on in this era, because if you look at mobile commerce, roughly only 50% of the people have conducted mobile commerce, and in addition, if you look at Facebook, roughly only 38% of Facebook users are mobile first. So I think that there's a long tail on this phenomena. And it gets back to